What is a full-time trader, guys? Doesn't have to work outside of that source. So using trading as a full-time income and doesn't have to work outside of trading to derive that income. That's a perfect example, isn't it? Often people say to me, I go, what's a full-time trader? And they go, somebody trading full-time. But the time bit is the bit in that question, isn't it? What is a full-time trader? But really a full-time trader is just somebody who derives their income from the market.
Positive, especially this weekend of the Art of Trading. Really concreted and solidly made me feel like I have made the right decision, and it's made me very excited about the future. Because I had no experience in the trade market, I still didn't know whether they were just another black suit trying to take my money, until this weekend concretely confirmed everything, and it was so amazing to see that they really are a family and they really are a tight-knit community.
My experience was very rewarding. The staff, I think, are so dedicated that it's a great atmosphere that you want to be around.
And we were talking about that risk and reward and how important that is, and what's my whole strategy for risk management, and if I'm having different portfolios, is my risk management strategy going to be different?
John Gow was unemployed when he started investing in shares through Wealth Within, a guide to help do-it-yourself investors make some smart decisions.
With trading, it's not about being in the market all the time. It's about just being in the market when it's the right time, because the share market, you can just trade with your laptop. I'm not being told what I can and can't do by a boss.
What your goal is what you can see in the future, isn't it? Yeah? Right now you don't know what you don't know, do you? And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah?
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale. Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to Wealth Within Live, the Australian stock market show where you get to ask the questions and we give you the answers about all things investing and trading. Tonight I'm going to share with you just how you can increase your trading profits by 30% or more. It's the third Tuesday in the month, and that means we're going to take a look at the major world stock markets. We'll also analyse your stocks, answer your questions, and a whole lot more. Hello and welcome. I'm Dale Gillham, Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now, it's interesting reading the YouTube and Facebook comments. I do that quite regularly, obviously, and some of you'll know that I actually do answer your comments. I'm pretty quick on them, hopefully, but it really is a flashback for me with all of those years back when I was one of the experts on Sky Channel. I mean, I was on a Sky Channel, for 5 or 6 years, very, very regularly, and so was Janine. And more significantly or specifically, the questions that we would get asked on Sky Channel and what people's perceptions were on the market, their perceptions on trading, their perceptions on investing. Now you'd think that things would evolve with people with YouTube, because when I started on Sky Channel, I think YouTube was maybe 1 or 2 years old when I first got onto Sky Channel. taking questions, helping people with investing and trading, and general chit chat about things. You know, sometimes maybe it might be in a stock, or they want me to look at something, etc., etc. And what was going on was people would get into these myths, and we're still getting those same myths coming up in the chat boxes, in the questions that I'm getting today. And it seems that we don't actually learn. Even though a lot of people, there's a lot of access to a lot more information, we're finding that people still aren't getting the right information. But I am getting a lot of feedback from everybody. I've got about 3 or 4 emails to go through tonight, and I'm getting feedback that people now are, by listening and watching the show, are getting some really good solid information that's really helping them. But we also get runs on stocks, or people running or following the herd, like I like to call it. It's like being sheep or lambs to the slaughter, and you get questions about the same stocks over and over and over again from multiple people, and week on week on week on week the same stocks. So we've seen that on this show with Afterpay, A2 Milk, Z1P, and some of the others. And it is quite interesting how people with the least amount of knowledge are following everybody else into the same stocks, and generally at the wrong time. But we'll actually get into all of that. But first up tonight, we're going to take a look at the major world markets, like I said before, and what they've been doing and what I think they might be doing in the coming months. Now, like last week, I've recorded my thoughts a little bit earlier today, just so I can get into that chat and see what questions you're asking, and looking at the stocks that you're wanting me to look at tonight. So I can get ready to show you or share with you my thoughts on the stocks that you're bringing up. So let's get to the video now, and I'll see you in a few minutes. I love the third week of the month because we do get into these, the world indices. Now, whilst Australia is technically an island, when it comes to global stock markets, we are aligned a little bit, and obviously we do have movements around that our market will move up and down, sometimes in alignment with other markets and other times out of alignment with other markets. But it does give us some indication of what we can actually expect and where money's flowing around the world, because as everybody knows, we become more and more of a global economy. Okay, what we've got on the screen here is the returns for the current calendar month on all these indices around the world. Now, it's from the 1st of July, so it's got right up to the 15th of July in here, 16th of July, sorry. I forgot today's the 16th. We've got the NASDAQ 100 up 3.86, followed by the composite, NASDAQ composite up 3.15, and the Dow Jones 2.85. So they're doing okay at the moment. It's pretty nice for halfway through the month. They're doing quite well. Then we've got Brazil and obviously Ireland. But here's the S&P up 2.47. A little bit slower than what the Dow is. Obviously, there's been some good stocks on the Dow moving up. Now, the top 30 stocks in the Dow aren't the same as the top 30 stocks in the S&P 500, although there is a lot of similarities, but they are different. Here's the Nikkei from the best Asian market so far at 1.93%. New Zealand's doing really well at 1.58, and Tokyo up 1.5. And the FTSE down here at 1.43. So we will look at all that. Here's the All Ordinaries Index for this month, only up 0.7 of a point, with the ASX 200 at 0.52, and the Hang Seng a bit slower again, down at 0.4. So these are all your major world markets, and as you can see here, there's no major, other than the Shanghai Composite, the SSCI Composite Index up down 1.23, in the DAX just in the negative territory there. But let's have a quick look at some of the charts. Now, this is your DAX. It's a monthly chart of the DAX going back to about 1981, as you can see there. Now, if I put on some price analysis, you'll see I've just used some ranges here, and there's a real good reason why the DAX has found some resistance up around this 13,000 or nearly 14,000 points through here, and it's pulled back. But it has pulled back a nice reasonable sort of period here to this 10,744, but I do think the DAX has got some more to run, and I think we're going to see it move up to somewhere around about this 15,283, and it could possibly get right up to that 17,785 in this next move up. Currently, we've seen 1, 2, 3, 4, 5, 6, bit of nearly 7 months up, just like the Australian market, but I think we need to have 1 or 2 months down before moving back up again. But more longer term, I think it is quite bullish, and I do like the market. Here's your Dow Jones, and if you want a really good Dow Jones report, then look at my US stock market report that I do every Tuesday. It's released earlier today or earlier on the Tuesday, when I do look at the Dow. And as we can see here, the Dow's looking beautiful here. It's closing right up nice and high, breaking through this former all-time high, which was set back in October. But right now, this strong close above here so far on the monthly chart. And if we go down to the weekly chart, you'll see here a little bit flat this week so far, but it wouldn't take much for it to move. Now, this week, there's going to be some volatility, as I mentioned in my US report, simply because we're in the earnings seasons. And earnings seasons, if you get a bit of unexpected news coming out or earnings reports coming out that were unexpected, then you're going to see the market get a bit of volatility. So it wouldn't surprise me if it moves up and comes back down a little bit, but right now it does look quite strong. FTSE's also really, really interesting at this point in time. Again, not quite as strong as the Dow and some of the other markets, but we still have 1, 2, 3, 4 up, 1, 2 down and moving up. So I'd expect 3 or 4 months moving up with the FTSE, and I do think I would expect it over the next few months to break that high there of 7,903. Now, not all markets will work together, and this is an interesting thing. I think the Dow and the Aussie market will fall down into a low at different times. I think the Dow's going to keep rising while our market falls into its low in September, October, maybe September, August, September, October, in that sort of bracket, where I think the Dow's going to be rising possibly right up through to October and then come down. So we'll get out of sync, and other world markets do the same. The FTSE's out of sync with some of those other markets we have just looked at. Here's the Hang Seng, and this is another really good market to look at. Again, it's 1, 2, 3, 4, 5, 6 months up. Had its low down in October 2018, moved up, came back down for the last 2 months, and again, a little bit of indecision so far this month. But if we start seeing a move up, a stronger move up, then this high will be broken. Back here, this high of, if I can get my pointer to stick, 30,280. I do think it's got more legs, and if that gets broken, then I would say in the next 12 months at 33,484 points, that would actually get broken as well, because that is the all-time high on this market. But it just needs to get a little bit more legs going at this point in time, but I think it's got some support there for the rise, and it will do very, very well. Just looking at the Shanghai composite, look at the Chinese market, it's not looking as bullish. We can see a bit more of a bearish move, and if I just expand that out, you can see here, it's not really, really bullish here. Now, I probably would expect it to close that gap with that bar, this big gap here, but it didn't quite close it, suggesting it's weak, and so it's likely to move further down. So at this point in time, not that exciting on the Shanghai composite, but then again, obviously you've got the US-China trade wars here, so if that gets settled, we may see that start to take off, because it looks like there's reasonable support across here. And lastly, we're going to talk about the Straits Times Index out of Singapore. A lot of movement, sideways movement across here. You can see a lot of resistance across around there, around that 3.4 to 3.5 sort of level there. So it'd be interesting at this point in time. The all-time high is back here in October 2007. So it really has held back like the Australian market, and I think this is looking nice. 1, 2, 3, 4, 5, 6 bars up, 2 bars down. I think this is going to start to take off, and it will break through that 3641 level in the not too distant future. So it does look good. It really does it to my mind, and once it breaks through this sort of resistance level, it will like snapping that rubber band and letting it go, or releasing the boat anchor from there. But that's it for me for the world market. So everything's looking really, really good at this point in time. As I said, some of them are going to be a little bit out of sync in terms of when they're finding their highs and their lows, but right now the Asia markets are going to be looking a little bit more bullish. US, I think, is going to be bullish for the next couple of months, then come down into a low, whereas I think the Australian market searching for a high and then moving into its low. But let's get back to the show. Welcome back. I hope you enjoyed my take on the world markets. I actually love getting into the world markets, as I said on my recording. It's really good. We do that once a month, always anyway, so we're quite happy to give you guys our high-level view. Jenna and I always go through the world markets on a regular basis. We always go through all the indices, the sectors, and just really see where money flow is going and really what's causing things to move. And I think that's what I said last week. There's always a cause and effect to things. Something causes a stock price to move or a market to move. So let's look at that and see where that money's flowing. And it's always good to take a look at world markets. And as I said, I think our market and the Dow are going to be out of sync for a little bit. We'll be going up or down while they're going up the opposite way. So, but I think so we have a look at some of the comments on the chat forum. I think there's a few new people. So welcome to anybody that's new. It's your first time on the live show. Thanks very much for joining us. I hope you really enjoy the show. And remember to post your comments down there. We get a ton of those at the moment, but I'll just put my glasses on so I can read it. Yeah, it's my birthday on the weekend, and I was expecting all these bottles of bourbon, but nobody sent any for me. But that's okay, but I am using my glasses because I do need to actually use them. Greg's talking about Costa Group. We'll get to that shortly. Greg, should I sell at a loss? Can you type down what you bought it for, Greg? That might help me a little bit. It's me, Boldy. First time made it to the live show. Well, welcome, as I said, to the live show. I'm just about to go to bed, but I can sleep when I'm dead. Yeah, that's great. Good song. I love that song, actually. Francis, first time for you. Well done. Yeah, we'll get to Lend-Lease for you. Moving through. Alan's on board. Thank you very much. Flight Centre, we'll get to that. It's me, Boldy B. Get ready for the D train. Well, the D train has left the station, and we're going to truck along tonight. So, yep, some good different comments. But let's go and get to some of those first few comments. But I want to read out a couple here from my emails. Now, the first one I want to actually get to is from Dale Thomason. And Dale says, hi, afternoon. It's a nice name, isn't it, Dale? Dale says, could you please share your thoughts on SVW or 7 Group Holdings? I'm interested in buying this share, but looking at it, it looks to be flatlining, and I'm not sure it will be going up or down. Now, I'm not sure why you're interested in buying it if it's flatlining, but let's go and have a look at it. We'll bring it up on the screen, SVW. Let's have a look here. So here is 7 Group Holdings. As normal, on the left-hand side of the screen, you're seeing a monthly chart. On the right-hand side of the screen, it is a weekly chart. Now, it's just doing through a consolidation phase right through here. So this part here is really a consolidation. And as I was saying a few weeks back, what we see happen is stocks move up in a move, and then they consolidate in a equilibrium period, and then they break out of that, or they either break out upwards or they break downwards, depending on whether it's bull or bear market from that point of view. But right now, this thing, it's down a little bit at this moment. Obviously, this current bar is a weekly bar. It's got 2 days data in it. So we're seeing Monday's, Tuesday data in it. So it does look a little bit bearish at this point in time. But all I would do is just grab my vertical lines on here, my horizontal lines. Where's my horizontal lines? I've lost them. Yeah, there we go. It's hidden here because, nope, it's not here. Let me get my trend line. I'll just use that, a trend line across. Click on it, Dale. I'm having a bit of fun tonight without Janine. It's always fun, isn't it? I always say I don't get interrupted too much if Janine's not on board. But basically, you're seeing this sideways pattern here, and you can see here how it's sort of sitting between these two lines. This is always a dangerous area for people to take trades because you never know how far it's going to go, when it's going to break out. And too many people jump in too early only to get caught in that sideways pattern. So right now, as long as it's holding up, but interestingly, it's got a high there in 1994, 1996, and then 1988. So that's the highest point. So we've got peak, higher peak, lower peak, trough, lower trough, higher trough, lower trough. So it's a mixture here. If it starts to turn around, then I think it would be quite nice. But right now, I think it's starting to lean in to be a little bit more bearish. So not something I'm sure of at the moment, but I think you should stay out. There's better stocks than this at this point in time. The next one I've got is from Sean East. And Sean says, hi Dale, love the show. Been a long-term holder of WES and purchased more at $31.10 this year. Do you think it will test its last high and continue higher? I also purchased JBH at $21 a while ago. I know somebody else wanted JBH as well. I think it was Jack as well. What are your thoughts on this stock regarding price direction? Thanks, Sean East. So let's go into WES, which is the next one here. Right now, that looks bullish to me. It does really look bullish to me. He said he bought it again at $31.10. I'm not sure sort of why you bought it at $31.10, but it does look fine to me. It looks like it's going up. Quite bullish here. Looking at that, it's at its all-time high, as you can see here. So to me right now, looking at this, it will break through this all-time high of 38.80 and continue to move up. But again, it's always about having an exit strategy. How far is it likely to go? Because you can see how well it's moved beautifully up here, but it's been moving up since that low down in December 2008. So eventually it's going to have a major pullback, but right now it does look bullish. So thanks for that question, Sean. Last email question I got was from Sally, and she actually asked a really good question. She says, I've been loving the show. Thanks very much. Videos and course. Obviously you must be doing one of our courses. I'm not sure which one. I'm not familiar with your name, but thank you very much. Hope you're enjoying it. But was wondering, when applying the method for selling high or when a stop loss is triggered and you sell, where in this current climate of low interest rates do you keep your cash until your next investments? Many thanks. So I just keep it at a call. Always do, whether it's a cash management account or just a normal bank account that's getting whatever interest, because the interest is really irrelevant to me, Sally, and I think that may sound a little bit strange, but the interest really is irrelevant to me, because too many people tend to try and go for higher interest rates and lock themselves out into like a 1 or 2 month term deposit to try and get an extra 1 or 2%. And by the time it comes up, they've missed some trades and they've missed 5 or 6%. Or 4, 5, 6% on a stock. So just keep it in a cash management account. That's all I do, or in a bank account, and then find some trades. So when your portfolios, you've got a medium-term portfolio, you're probably fully invested around about 80% of the time. Fully invested, you might only be about 20% of the time. 80% of the time you'll have stocks or money in the bank to buy extra positions. So in a bull market, you might be in a really strong bull market like we had prior to 2007. You'd be 100% invested for longer periods of time. In a bear market, you might only be 30 or 40% invested for most of the time. So it swings and roundabouts, but you always need to have cash ready to go into the market as a trader. So just use a cash management if I can't say that properly, a cash management account, and you'll be fine for that anyway. So let's look at a couple of stocks that you've asked me for. So I'll go back up to here. So we've got Costa Group. Did Greg actually type down here down the bottom? I've got to flick. There's so many comments, guys. Did Greg tell me? Greg, $5.26. Thanks, matey. I'll have a look at it. $5.26. So you bought it up somewhere in around about here. Now, if you'd watched my recordings or previous recordings or shows, and I talked a bit about Costa, I said it wasn't a stock to own anyway, so I'm not sure why you bought it in around 5.26. But right now, why would you be exiting at this point in time? It's gone up 1, 2, 3, 4, 5, and so far this week it's going up. So let's put on here, I'll put my 5.26, so where's 5.26? Let's here. So if you look at this, you're down 32.49% at one stage, or pretty close to it. And let's put it on here again, and now you're down around about 19%. So you're catching up. Now what the point I'm saying at the moment is, normally if somebody transferred this stock into our managed account service, and we do get stocks like this transferred in, the people have stocks that they've been holding for years, and some of them in major loss positions. What Janine and I do is generally we manage them out. While it's moving up, we stay with that stock, and that's the important thing. Is you don't know if it starts to fall away, then you'd look at exiting. So you have an exit strategy on it, but while it's floating up, you're going to be pulling back some of your money, because at the end of the day is you can't compound, without being rude, you don't compound a poor decision because you got into a stock that you shouldn't own by making another poor decision by getting out of a stock that's rising, and hopefully it will rise back up into this sort of area. And when it does, I still wouldn't exit if I got back to my buy price. I would only exit when it tells me that it is going to start to turn around and start to fall away. So right now, stay with it. It does look all right from my mind at this point in time. Let me have a look at another one here. So that one was, let me go back up here. I've got to work this chat for them, don't I? Well, I've lost my point. JBH, we were going to have a look at that. So where was JBH? I've got it here somewhere. No, there it is, JBH. So let's look at JBH. JBH, I actually like it. It was one of the good stocks last week. It had a beautiful run last week, breaking through that previous all-time, my previous high, 28.65, and beautifully moving up. And obviously the last 2 days of this week, it's moving up strongly. But if you look at JBH, that's looking very, very nice. Now this stock, strangely enough, this is one of the most shorted stocks on the All Orders Index constantly when you look at the percentage short sold. And I won't explain that for most of you, probably wouldn't. It's not necessary for you to understand that. But it is generally constantly on the highest level of short sold stocks. But you see this big move down, and if I put my little tool on here, you can see how far it did move down through into this low here, 35% into December. And now look at it, 1, 2, 3, 4, 5, 6 months up. So I think this is going beautiful. I think we're going to have some nice run. I would expect 1 or 2 months down over the next 1 or 2 or 3 months. So I would expect at least 1 month down in the next 1 to 3 months. and then to move up, but then I would suggest it would move through into Christmas and it would break through that previous all-time high. So I really do like this stock. So, but really, really good stock for you to bring up at this point in time. Where's the next one that I've got? We've done Costa, we've done JBH. Lend-Lease was the next one. That one's from Francis Grobler. He said, can you have a look at Lend-Lease, trying to learn about buy signals? Reading your second book now after finishing the first one. Thank you for buying both of my books. That's fantastic. So Lend-Lease is, let me guess, there's Lend-Lease. I actually do like Lend-Lease. It's a great stock to trade. It's a really good trading stock. Now, somebody did ask me a question about Lend-Lease a little bit earlier. I think it was from my Monday stock report about low interest rate environment and whether this would be a good stock in the low interest rate environment. And to me, it's great. People, as long as people are borrowing money, it's fine. But Lend-Lease is in property, etc., and it's doing very, very well right now. It's had this huge move down into this low in January, and it's been 1, 2, 3, 4, 5, 6 months up. I think right now it's moving up quite nicely. I think it is more bullish at this point in time. If we look at that, there's plenty of room for these previous all-time highs way back there over 10 years ago. So, and it struggled to get through it, but it does look nice. When it does move down, let me put one of my little tools on it, and we'll stick that here. And you can see here it's fallen down to the support level here. I think it's looking good. I really do. I think it's a nice little stock at this point in time. Not a nice little stock, very nice stock. But I think it's a nice stock to put into your portfolio and have a really, really good look at it. Let me have a quick look at the weekly chart. Would I buy it right now? No, I'd be sitting back. We've had 1, 2, 3, 4 weeks up. What I'd probably like to see is it move up and move down a little bit. And if I use my little trend arrow, here's my trend arrow here, there it is. So what I'd be looking at is just a bit of move up and a little bit of a move down, and then pick it up on the way back. So I'd like to see a little bit of a test of this low and then starting to move up, and then I'd buy into it. Because you've got a bit of resistance around this 1440 area, and I want to see it go through that, because if it does get through that, then there's a lot of blue sky. If we look at here, from that high there to roughly where it is, there's 33%. So you don't have to jump in too early. And that's a real sin that a lot of people do, is they jump in way, way too early on stocks, only for them to keep falling away. And one of our comments later on tonight, you'll actually hear that from somebody who was talking a little bit about that. So, but as I said, but I'll look at the chat more in a little bit. But we have another question from what we got, Ryan Sattler. He's sent that through a little bit earlier. He said, can you talk about Elixinol, I think that's how you say it, Elixinol Global Limited. So let's bring up that chart. So that's EXL. So I'll put my glasses back on again here. Right now, this stock's bearish, and that's really what I can see is Elixinol Global. So you can see here how it's fallen down into June there. 2.1 million shares. It's not too bad in the liquidity stakes. We've got a lower peak, lower trough, a trough, lower trough again. Right now, it looks like it's got further to fall. Right there, that's what I'm seeing at this point in time. I think you're looking at roughly, if I do here, you'd probably be looking at somewhere, if it breaks through this 3.58 level, it's going to head probably down to about this $2.40 level. But right now, as I said, I think it's more bearish than bullish from that point of view. You don't say whether you own it or you don't own it. So, but right now I wouldn't be entering into this stock. That's been my take on this stock at this point in time. We also have a question from Dale Thomason, who says, "Evening, Dale. I know you reviewed Coles or COL a couple of weeks ago, but I would like an update to this stock. I've bought in at $13.79, probably not on the best logic. There is a slight pattern, I think, of this stock going up over several weeks, then down for a couple of weeks. That's just normal market movements. So I think this is only going up at this stage. As stated before, not the best logic. Comparing it to Woolworths, which is now floating in and around $30 area. Your thoughts, cheers, and keep up the good, informative Tuesday night." So I will keep up the good and informative Tuesday night. So let's have a look at your stock here. Now, where is it? Let me have a look. Coles, I've forgotten where it is now. Where's Coles? There it is. And we'll have a look at Coles. Coles, as I said, it split off from over here back in November last year. Right now it's looking bullish. Simple. It is simple, and now I'm not sure why you got in. As you said, you probably had a little bit of flawed logic, but right now this stock looks bullish to me. It looks like it's going to continue to be bullish. Being freed on its own, it can do what it likes, so to speak, if that makes sense. And sometimes when you see companies split off like Coles did, it will take off. But right now it does look bullish. That said, we've got 1, 2, 3, 4, 5 weeks up. So what this does, I'm not sure how you get a pattern, and you're talking about a few weeks up and then a few weeks down. That's normal. When you're looking at stocks, you will see the stocks will rise for 2 to 5 weeks and fall for 1 to 2 weeks. They'll go up for 2 to 5 weeks, fall for 1 to 2 weeks. And in the bear market, it's exactly the opposite. They go from low to high to low, from low to high to low. That's what stocks do. They don't just go up for 50 weeks in a row and then come down 50 weeks in a row. That's not how they work. They do move up and then they float down, then they move up and float down. So, but it need a lot more solid analysis than that, which is, I'm sure you fully understand that you do need that more knowledge about getting in and getting out. So let's have a quick look at Woolworths too, because obviously that's the other one that you had a quick mention of. Again, another bullish stock. Look at that, it's beautiful moving up, beautiful trending up. Here's its previous all-time high back there in April 2014. If we look over there, you can see that big pattern there. Looking at April 2014, I think it's still going up. I think it looks good. We've got 1, 2, 3, 4, 5 weeks up. We've had 1 week down so far. This could be it, and if it moves up and still closes higher by the end of the week, then it will break through that $34.84 very, very soon and continue on its merry way. But it does look really, really good at this point in time. So 2 good stocks there. So well done, and keep up that good, I won't say keep up your good guessing, but I'd suggest you get better rules about buying and selling. Now, I got an email yesterday from Yusuf. Let me get my glasses off. It's hard to read the teleprompter and look at the charts with my glasses on or off. I can't do both at the same time. But I got an email, as I said, from Yusuf, and I thought it was really worth sharing with you tonight. And Yusuf wrote, I started watching your Tuesday show since March 2019. So he's pretty much watched every show because I started them on the first Tuesday in March, I believe. Now, before that, I was a staunch bottom picker of stocks. Now, my views were entrenched in my mind, although I was generally losing money. Watching your show, I learnt and understood the perils of bottom picking. This has helped me to avoid losses, especially for AMP. I was tempted to bottom pick AMP since its fall in October 2018. It was only by watching your show that practical sense prevailed on me, and today AMP dropped to $1.80. I was glad that I'd not done bottom picking and wish to thank you. Regards, Yusuf. So that's really nice. Let's have a quick look at AMP. Now, this is the next stock on the chart, and you can see exactly what Yusuf's actually talking about. So it closed here at $2.15 last Friday, and then on Monday it gapped right down and opened at $2. So a huge big move down, and if I put my little tool on it, you can see the big move down to where it opened. That was over nearly 7%, and today it's down 17.21%. So massive move. Again, this is real prime example of why you don't try and catch falling knives, and why we can constantly say always buy on confirmation, not speculation. And people do. They say to me, when I ask people, why did you buy the stock? Quite often I get the response, I thought it was cheap. And if you'd bought this stock at $2.20, is it still cheap today when it's sitting down at closing at $1.78? And the answer is no, it's not. And really that's what we talk about, is not trying to bottom pick. And what we're saying here is don't try and pick the very bottom of any move, because you'll get it wrong most of the time. What Janine and I do is we try and take the safe part of the trend. So we always confirm a stock is moving up before we buy it, and we always confirm it's moving down before we sell. And some people go, well, if you can wait for it to start falling away before you sell it, you're going to lose some of your profit. Now, how I look at this is when my money's in a trade, so when my money's in the market, there is only 2 things that I can do. One is I can stay in or get out. That's it. I can't do anything else because I don't control the market. I only control the decision to stay in or have the decision to stay out. That's all I can do. So I treat the money on the market, when I've got a trade on the market, it's not my money then, because until it hits my bank account, it doesn't become my money again. So I treat it with that sort of respect, and whilst the money is on the marketplace, I let it run, but I don't treat what profit is there in terms of the difference between my buy price and the current price. I don't treat that as my money until it's in my bank account. So therefore I'm quite happy for that to drift off the top, to come down a little bit to confirm it's falling away before I exit, because I'll get the exits right most times. And not all the time, nobody gets 100% right, but it is that thing, you don't bottom pick, because you'll get it wrong most of the time. So trying to pick the very bottom or the very top, you'll get it wrong most of the time. And I would suggest Yusuf, he's now trading better, obviously he saved himself money, and I would suggest that people that have been doing what Yusuf was doing, who's no longer doing it anymore, you don't understand the real cost to you in terms of lost profits, lost capital and lost time, because that now gets us into our topic for tonight's show. As I mentioned earlier, it's how can you increase your trading profits by 30% or more. Now, I could have tackled this subject in several ways. In fact, I've got 100 different ways I reckon I could tackle this scenario of helping you get 30% more on your profits from your trading. For example, I know from experience that the majority of you watching this channel tonight are not using a stop loss. And I know that for a fact. I don't know how many times I've done presentations and said, who uses stop loss? And 90% of people in the room put their hand down, or don't put their hand up, sorry. So I know most of you aren't using a stop loss or a solid exit strategy. And if you are using a stop loss, which may be basically 1 in 10, which I was mentioning there a second ago, you are not setting your stop loss correctly. That is, unless you're one of our diploma students or our students. If you are, then you'll be setting it correctly. But if you're not setting it correctly, this will cause you to exit at the wrong time. Now, understanding how to set stop losses properly will seriously increase your returns by 30%. Just that alone, if you understand how to exit and set stop losses properly, your returns will increase by 30%. And it's a no-brainer for me to anyone wanting to enhance their trading returns just to set a stop loss. And if all I can do is teach you to set stop losses and get you to do that regularly, you will make more money. There is zero doubt in my mind, and you'll be thanking me and buying me beers when you see me in the pub. Also, the majority of those investing or trading do so with very little or limited knowledge. And so either enter too early or too late, or they exit too early or exit too late. And this costs them dearly in lost capital, lost profit, and lost time, which most people don't factor in. They don't factor in the lost time. They don't factor in the lost profit that they could have achieved if they weren't in a trade going down. Now, fixing any of these areas will increase your returns by 30%, let alone fixing them all. Whilst undertaking our diploma course, we will fix all of those areas and get you trading consistently and profitably. Now, tonight I wanted to tackle this subject from a slightly different point of view that most of you may not have ever even thought of. Now, I'm assuming since you're watching this show that you are keen to learn how to increase your trading profits so you make more money in the stock market, and do so by using simple, profitable trading strategies. So let's get into showing you how to do just that. Now, let's face it, most of us don't like paying tax. So much so that many investors often lose thousands of dollars because they are told by professionals to hold onto a stock that is falling in value rather than sell and pay capital gains tax. Now, some of you who went through the GFC will know exactly what I'm talking about. I don't know how many people came to me and said, my financial planner, my accountant told me not to sell because I'll pay tax. Well, that's great when your stock's fallen 70, 80, 90%. You haven't paid tax, but you've lost a lot of money. And I remember standing in a room presenting to some senior accountants who've had 20, 30 years experience, and I was doing that for CPA Australia. In 2008, and I said to them, would you like me to give tax advice? And they all said no. And I said, well, don't give people investment advice. And I said, all of you in this room would have told people not to sell because of capital gains tax during the GFC, and all of you have decimated your clients' portfolios by giving them that advice. If you're not an investment expert, then don't give investment advice, and I won't give tax advice. And you could have heard a pin drop in the room. And this is really what happens is you need to make sure that if you have a stock that's falling away, you do need to exit that stock, and paying tax is okay. In fact, I would rather pay the tax man $1 million because I know I've made $2, $3, $4 million, so I've made more money. I'd rather give him a bunch of flowers as well and a bottle of champagne saying thanks very much. I paid some tax because I've made more money. Now, indeed, it's widely publicised that we should minimise the capital tax impact on our investments. That's what your tax advisors are there to do. They set you up in structures and whatever you need to do to minimise tax, but you should never make an investment decision based on tax. Rule number one, never ever invest for tax reasons because it's fraught with danger. However, I propose that this costs you a lot of money and lost opportunity, which is why I consider this a myth. So let me explain. So paying capital gains tax is great, but not paying it leads you to poor returns. Because if a stock turns and moves into a downtrend, falling over the medium to longer term, it will fall anywhere between 3 months and 3 years. And it's normal for stocks in a downtrend to fall 30% in price over that time. So when a stock falls 30% in price, this means it needs to rise 43% just for you to break even on your investment again. If it falls 50%, you need to double your money or the remaining capital to break even. So the more you lose, the more you have to make to break even again. Now, in the meantime, you've not only lost money because you haven't sold, but also valuable time compounding the returns on your trading portfolio. Now, if it takes 6 months to fall 30% and 18 months to rise back up 43%, then you've held that losing position for 2 years with no gain except for receiving a dividend. But again, I hear you say that you'll have to pay capital gains tax if you sell. Well, great, as this means you're making a profit, and that's the whole idea of investing. Now, some of you will tell me that, I haven't lost because I haven't sold. That's another myth. If you believe that, then that is costing you severely in your portfolio returns, and I strongly recommend you get that out of your head because that one myth will keep you broke. Now, in Australia, the amount of capital gains tax you pay on your trades will vary depending on how long you've held the assets, remember, but you can hold them for over 12 months and you get a 50% reduction. But irrespective of this, it just makes sense to sell an investment you've made a profit on and pay the tax. In exiting, you are using your risk management trading strategies that are designed to protect your capital, and in doing so, dramatically increase your ability to make more profits. Exiting is far more preferable than holding on to an asset that is falling in value, as holding will compound your trading losses and result in poor portfolio returns. Because remember, you're not only losing capital, but you're losing time. And that time is the ability to compound and get into stocks that are going up. Now, can I ask you, would you rather own stocks going up in value or going down in value? And I know the answer. You always want to go into stocks that are going up rather than down. So let's just get rid of the ones going down. Now, the amount of capital gains tax you will pay could be and often is much less than the amount you might lose as the stock falls in price. So let's take a look at when to withdraw your trading profits. Now, let's assume you invest $100,000 in 10 different stocks with $10,000 invested in each stock. Now, 6 months into the investment, one of the stocks, after rising 12%, turns and starts to fall in price. If you decide to exit the stock, you will be required to pay capital gains tax on the shares you hold because the tax is triggered by the disposal of the asset. Now, given you held the asset for less than 12 months, you'll be required to pay tax on the total value of the capital gain, which in this case is $1,200, which is $10,000 times 12%. If you pay 32.5 cents in the dollar tax, you'll be required to hand over to the taxman $390 to the tax office. However, if you decide to hold onto the stock and it falls 30% in value, your position will have lost $3,360 or $2,160 on your original investment. Can you see how devastating it can be by holding stocks falling away? So as you can see, by applying a simple money management trading strategy such as a stop loss or trailing exit strategy means you have not only minimized your losses but increased the opportunity to compound your trading profits. You can't compound your returns if you sit in assets that are falling away. Now, again, I can hear some of you saying, well, what about brokerage and GST? Well, even if you take all of these costs into consideration, you'll still be far better off exiting from an asset that is falling in value. Besides, brokerage these days is next to nothing, and GST on next to nothing is, well, you know what it is, nothing much. The important thing is that you'll have retained all of your original capital, or the majority of your original capital, plus the gain you made. Now, if you can do this, then you'll be able to invest in another stock that is rising in value, meaning your portfolio returns will compound more rapidly. This is far smarter than holding onto stocks going downhill. Not knowing when to sell kills the majority of portfolio returns, increases risk and your stress. So surely it makes far more sense for you to learn how to exit than guess all of the time. Now, it's quite interesting to me when some people inquiring about our courses say to me that they are expensive when they're struggling with their trading. What they fail to realise is that their ignorance is costing them far more than our education. Now, let's bring up the top 20 stocks, and I'm going to share with you some examples of just what I've been chatting about. So let's bring up the top 20 stocks. So if I bring up here, we look at, here's AMP, so top 20 stock. We'll look at Woolworths again quite quickly. Lendlease is a top 20 stock, but we can look at a few of them. If I bring up a monthly chart on this stock, you can see here massive rises and big falls. Now, if I use my time tool, and we can see this large fall here, that took 17 months to fall away. Now, if you'd sold out somewhere up here, you still wouldn't have got your money back. And at this point in time, if you hadn't sold up here, you'd be sitting on that stock that you had in your portfolio would now be down 83.7% from where it was. So exiting pays in this point in time. Let's go and have another look at another example. We have this move up through to here. If that one down to this point in time, it's 53 months at this point in time. And again, hasn't risen back up from that point of view. Let's now look at Wesfarmers, another big stock, big top 20 stock. And I put it on here, time price measure. Here's a previous move. And if I put my pointer on it, come on, get on there. And we go down here, 18 months falling away. Now, how long did it take to make back up to that level again? Now let's go across here and let's put it onto this bar here. And you can see 68 months just to get back up to, 69 months to get back up to the same price that it was before. And in the meantime, you've lost 66.4% on another big blue chip stock. Let's look at another place here. Here's a high here. It fell away for 13 months, over a year. And put it on here. And to get back to above that, it was in 29 months, as you can see there, hopefully you can see that, 29 months to get back to the same price. And in the meantime, you had your value of your share 34.15% falling away. So you're getting the picture. If you exit, take your profits, get into another stock. Because if you'd moved out of a stock, a different stock, and put your money into Wesfarmers, and you put it in somewhere in this run here, you can see how this run is 114%. Wouldn't you have rather got out of a stock here and then got into Wesfarmers through here? And here's plenty of examples here. Let's even go and look at Telstra here. Here's another one. Look at this, Telstra. And this has been mainly bearish, but you see this bullish move right up through to here. Let's look at this, and you can do this, I can sit here all night and do these on the big stocks. 40 months going down, you'd still be no money. If you'd sold out up here, you would have got about $6 and you could have been in BHP, Rio, Fortescue, other stocks at this point in time. But I think you're getting the point that if you're holding stocks because you're afraid to sell, or you're afraid to take a loss, or afraid to sell because you're losing some of your profits, then you're in your decisions or your emotional decisions, you are costing yourself more than 30% of your portfolio, and you're giving yourself really, really average returns. And I'm super serious when I say to people, your ignorance is costing you far more money than getting a really, really good education. And people don't quantify that. And you know, if you are seriously interested in learning how to do it properly, then have a look at our courses, because we'll stop all that issues for you. Because to me, it's just stocks. You just buy and sell. I'm not emotionally attached to any stock that I own and I'm buying and selling. I just get in and get out. That's all it is. And that's all it should be for you. They're just investments. You know, you don't get emotionally attached to them. Same with property. They say don't get emotionally attached to investment properties. You don't buy an investment property because you like the bathroom and the kitchen. You buy it because it's good investment, not because you like the bathroom and you don't get emotionally attached to it. But I think it's about time we got back into the chat forum now and had a look at some of the stocks on the chat forum. So I think we finished off with Francis on Lendlease before. So I hope you've enjoyed that little explanation I've done here. But a lot of stuff I'm doing, we put into presentations, or we used to put into presentations for our students. So I'm condensing them a hell of a lot and obviously make them a lot shorter for you to help you. But hopefully it's getting through to you that you need to sell stocks going down, buy stocks going up. Mike Williamson says, hi Dale, could you have a look at Flight Centre? Like the look of it, traded above its previous peak and has 3 weeks up. Flight Centre is on here somewhere. There it is. So there's Flight Centre. We've got from that low here in May, we've got 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Down for 3, up for 2. It's looking good. Little bit of a resistance here, so I can understand why it's slowed a little bit at this point in time. But looks like it's going up at this point in time. I think it looks more bullish. Flight Centre is quite volatile, and again, you can see how many months did it go down here, how many months did it go down here. And if I look at here, if you'd sold that up there, you would have taken you 4 years to get back up to where you had it. So again, it's just constant this. But right now, it's a little bit weak. I wouldn't suggest it's going to be super strong through here. A little bit of resistance sort of around that sort of $45, $46 mark. But I do like it at this point in time. I would wait for it to strongly sort of break above that 44.28. So 44, what's that? 44.57. I'd really want it to get through about $45, $46 before I'd start to get too excited about it, but is looking a lot more interesting at this particular time. So let's keep going. I know there's so many of these things at the moment, the different questions. So sorry if I'm not going to get to yours today. RB says New Farm. So have I got New Farm up there? I think I've got it somewhere, haven't I? There it is. There's the next one. New Farm's looking really good at the moment, but still too early to buy. It came very heavily, fell heavily down into June. A heavy fall. But right at this point in time, as you can see, there's 61%. But right now it is looking better. If it got through that sort of 460 area and started moving up into there, then I would get quite excited about it. But right now it does look all right. So good stock to pick at this point in time. I'm not sure what your rules are, but is looking good. That's RB, so good pick, I would say, from that point of view. Nelson Abala says, hi Dale, what's your view on ANZ at the present time? I already own some shares in it. However, was thinking about buying more in at the present. Keep up the great shows. Really enjoy them. Thank you, Nelson. So ANZ, maybe that's the next one. There it is. It is the next one. Bearish at the moment. I'm not sure why you bought more into it. Actually, this is probably our least favourite bank. CommBank's our more favourite bank. Westpac is not so bad, but ANZ, right now, I'm not sure of this bank, and it's not really super strong, so I'm not sure why you bought more into it. But that's your choice, depending on your view. If you've got a longer term view, you're not going to lose money if you hold banks for long periods of time, 10 years plus, but you make far more money trading the banks. And a lot of you have mentioned my book. Go and look at my book. Just trading CommBank and these banks, you'll make far more money buying in and out of them and not holding for long periods of time. And you'll seriously understand how you can increase your portfolio returns by 30%. It's not that hard if you've got some rules. If you're trading without rules and you're guessing a lot more, you're not going to get the extra 30%. You're going to continue to struggle. And to me, that's why it pays to get a good education. And when I mean it pays to get a good education, you made shed loads of money. That's really what it's about. And you will do that. We've got Kurt Stevens. He says ASX is making a descending triangle on a daily chart. Let me bring up ASX. He said descending triangle on a daily chart. Big deal. Big deal. It's a daily chart. Doesn't really mean too much. And I'm not trying to be rude to you, but it really doesn't mean much. On the daily chart, is this a down leg happening? And what do you think of BetaShares Bear ETF as a short-term trade till the bottom of the pullback? Bottom of what pullback? That's my question. I'm not a big ETF person. I really don't like them, especially index ones. But if you think our market's going to fall away heavy, then I don't have an issue with going into a bear ETF. But ASX is bullish right now. Have a look at it. Look at the monthly chart. Don't look at daily charts. And if you're not sure why, go back and look at my recording, our live show from I think 2 or 3 weeks ago, guys, when I talk about daily versus weekly. If you're looking at daily charts, then you're going to get it wrong a hell of a lot of times. And right now, this is a little pattern it's making. But right now, I don't suggest ASX is going to fall away until it tells me, and it may fall away for 1 or 2 weeks, but it doesn't necessarily mean it's going to be in a bear market. But again, if you want to trade an ETF or buy an ETF called bear, if you think the market's going down, then that's your choice. The market will be moving down into a low in sort of August, September, or sort of September, October-ish, but I don't expect it to be a huge fall. So you've got to time your entry and exit into that properly. Otherwise, you're not really going to make a lot of money. I find quite often it's better to exit your stocks and then come back in later. And we did a lot of extensive testings of putting like put options on stocks and portfolios, warrants, protecting portfolios, and we found the exit strategies that we teach in our course absolutely streets ahead by then taking hedging positions on things like ETFs, options, warrants, those sorts of things. If you use the right exit strategies, you won't need to put the protection in, because in terms of using instruments those like options, warrants, FX, and obviously ETFs to protect that downside. Because you really go into a nil-sum game in a lot of those things if you're protecting your portfolio. We'd rather just exit, come back into at a lower price point, and you make far more money without all that. And I won't go into detail how it happens, but we did a lot of research on hedging and protecting portfolios. So for our managed accounts that we actually do manage. What do we got here? Rec 276, trying to learn. I'm glued. I'm getting your book. Oh, thanks. Well done. Francis Gobler, Rec. Okay, have both books. Francis, you're a greedy person, having both books. Is there any more stocks here? I'm just flicking through down. Wow, there's so many comments. Gepert says, I recently got VMY small cap. Not really my thing, but that's how it looks. Let's just bring that up and we'll have a look at that. VMY, Vimy Resources. It's very much small cap, isn't it? Look at that. Looking a little bit better, but it's very, I would say it was probably come back into this sort of area in not too distant future. Probably come back to this 6 cent area. Let's bring that up. It is looking a little bit more bullish, but does look very, very illiquid. Look at that. It's quite a liquid here. So look at that. Volume 1.2 million shares on a 6 cent stock. So it's not a lot of dollars. Always multiply that trading volume by dollars to see where you're at. And here we got 2.7 million shares. Today we had 3 million shares at 7 cents. So it's not a lot of cash in that. But I would suggest this move up is not going to last too long. It'll probably come back into that area through here again at this point in time. So, but good luck. Have a stop loss on that for yourself. Let me go and have a look. Pedro, hey Dale, newbie here. Welcome, Pedro. Welcome to the show. What did you say there? Pedro says, loving your show, thinking of undertaking a diploma course. I hope you do. It's a great course. I think you'll love it. I'm sure other people will tell you that too, that any of our diploma students are on. Curious to know your thoughts on PLS. Hopefully chat to you in the future. I think you could buy me a beer, I think, or maybe I have to buy you a beer. I'm not sure, but maybe we'll do that. But PLS, let me just bring that up for you. And there we go. ASX, Pilbara Minerals. Look at that. Bearish. Simple. It's really, really simple. This is bearish. It's probably, if you're a newbie, I would stay out of this stock at this point in time. But right now, all I can see is it's probably going to come down into this sort of area here at this point in time. So nothing good. I can't give any good news here at this point in time. Pedro, sorry about that, matey. It's me, Boldy B. Happy birthday, Dar. Thanks. I'm drinking Gentleman Jacks to celebrate. Thank you. That's good. I like a bit of Jack Daniels. I like a bit of Maker's Mark too. I like that one as well. Happy birthday, Dale. Thanks, guys. Costa Group, yeah, we talked a bit about that with Greg. Holding Woolworths. David Matthew says, I'm holding Woolworths. How well is it trending up at the moment? We did talk about, did we talk about Woolworths earlier? Yeah, we did. So, we talked about Woolworths earlier. So if you didn't see that, please go back on that one. We've got about 5 minutes left, guys. So Bryson says, hi Dale, Bill here. Brought Accelerate Your Wealth last week. I'm glad I did it. Also use it to refer back to you during your show. Love it. Thanks, matey. I'm really pleased for that. Boris is asking for GOR. I've never heard of that stock, GOR. Let me have a look at that. Gold Road Resources. That looks bullish, doesn't it? Looks really, really nice. I've never seen this stock. Looks like it did a backdoor listing somewhere back in December 2010. Bit vertical. This is probably the only thing that would worry me here. It's a little bit vertical at this point in time, and it will need to come back to its. If you look at here, stocks will trend on an angle, as you can see. Now I'm just using the trend line tool here, and generally they'll float up along their momentum because the market moves in momentum and volatility. And it's really important you understand this, as everybody is. The market moves in time, price, and pattern, but it creates its volatility and momentum that you want to look at, because they're the metrics the big end of town look at, and they're always measuring momentum and volatility. And you hear it when they talk about things. So what we're talking about is stocks will always have their momentum and then they get volatile for certain periods of time, say it's reporting seasons or around reporting season. They might have announcements they're doing, so they get more volatile for a period of time. They also people get excited about them, and people might be chatting on chat forums, all sorts of stuff, and so they'll take off and create more volatility. So their price rise or their price fall may not make sense in fundamental terms, but it's just what's happening, because like at an auction, if people really, really love a house, it may be worth X, but they play X plus 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 because they really love the house and they're not being logical about it. And a lot of people say to me, hey, the market's just mathematics, and well, to some degree it really is mathematics, but it still runs on fear and greed. And if people think a stock should be trending up and they're going to make more money on it, they're going to keep buying. And we saw people do that with Telstra, taking it to all-time highs. We saw it with Bitcoin, absolute classic example. People didn't think they could lose money on Bitcoin, and only today I was just chatting to one of the guys who works with us on our managed account service, and he was talking about talking to some guy. He said, I'm ready for you to manage my money because I've started trading Bitcoin and I've lost it. That sort of stuff. And we hear those stories all of the time, people speculating in markets they shouldn't be in. But looking at this point in time, I would suggest this vertical move, if you're looking at that, it's the strongest move it's had since way back here. So I'd suggest it would slow down and come back. I'm not suggesting it's going to fall away and be bearish. I'm just saying if you're not in it right now, don't get into it. And if you are in it, just hang tight. It looks really, really, really nice. What do we got else here? Majid, how you doing, Majid? Hi Dale, just wanted to say thanks a lot. Almost finished my module 3 of the diploma, loving it. Good forward to learning more. Well, thanks Majid. Dale Thomason, evening Shane. Wow, a lot of questions. It's me, Boldy B. Hey Dale, I'm sticking with ADT long-term hold. ADT. Let me have a look at that. Is that the one I already looked at earlier? No, I didn't, did I? Long term. Well, I'm not interested in long term. It doesn't have a lot of history. Right now, I don't have a problem with you sticking to it. I just put an exit strategy on it in case it does. It was speculative when I bought it. It was purchased when I first started. I'd like to hear an update, as you did mention them a few weeks ago. I think this is the stock that you are talking about. Right now, it looks quite all right. We have 1, 2, 3, 4, 5 weeks up. I reckon 1 or 2 weeks down and it'll take off again. But right now, I do like the stock at this point in time. So don't be too worried about it. What do we got there? Barry Ward says, hi, Majid. Okay. Harmony Green, hi Dale, any thoughts on MGF? Looking great after a nice sideways move. Looking steep at this point. Harmony, that's a new name I haven't heard. What are we looking at? MFG. Magellan. Okay, there we go. Look at that. Very, very vertical. See that one? That's hugely vertical on the monthly chart. And really looking at the monthly chart does help you. I would suggest it, if you're not in it already, I don't suggest you get into this at this point in time. Looking very, very steep at this point in time. You're totally correct. But again, if you've got the right rules on here and you've got a nice trend line in it or some sort of solid exit strategy on this stock, then I would suggest it will just come back to its normal movement. But big long sideways move broken out, but just put an exit strategy on this. Whether it's 15% below, let's say if it falls away from this current high, let's say if it does do that, and I'm not suggesting it will do that, but if it does, you just exit 15% from a high. So that would get you out at around about roughly where my trend line roughly is there, so around about 48, 41. But there's other exit rules that we would use on this stock as well. So right now it does look pretty good for my mind. But as I said, there's a lot of people on asking a lot of questions, and I can't get to all of you at this point in time. And I'd love to be getting to all your questions. Just want to talk to you a couple of things. Now, a couple of months ago, I offered to personally mentor 10 people who are serious about wanting to trade properly. Now, we got many wanting to take up the offer. In fact, I got a lot of people wanting to take up the offer, but I could only take on 10. And since then, a couple have had to pull out of the mentoring due to some work and other commitments. And I've been working with the others and doing that. It does take a little bit of my time, but this spells opportunity for you. So if you want to send through an email, if you're looking at doing our diploma course and you're really serious about wanting to put the time and effort in to learn how to be a really, really good trader, basically no time wasters. It really, and I'm not trying to be rude to anybody, you need to be serious about trading. So if you want to join our diploma course, I've got a couple of spots there for people to be personally mentored by me. Now, to qualify for that, you need to have a bit of a chat with us. So you'll need to chat with our team, and they'll give you the rules around what we need you to do to qualify to become one of those. A couple of people that I have, there is a qualification. I don't take everybody, and I don't mentor too many people personally one-on-one. So if you are looking at our diploma course seriously and you really do want to become a kick-ass trader and improve your portfolio returns by 30% or more, then please send an email through to info@wealthwithin, and in the title of that email, put in the title, just put 10 traders, and then put your name and your details and when the good time is for our guys to give you a call so they can have a little bit of a chat with you about how to qualify to become one of those couple of traders that I am looking at. But I hope you've enjoyed tonight's show, and thanks for participating. It's been awesome. There's been, as you can see, so many people participating on the chat that I just couldn't keep up with it on my own. I really probably could do about 3 hours based on that chat. And yeah, you're probably saying, yeah, Dale, keep going, but my wife does like to see me. But as again, thank you very much for participating. Your questions have been awesome. If you'd like to see the show grow, because I've got lots of different ideas and I do want to break the show into a couple of different areas like investing and trading and those sorts of things, and lots of ideas that I want to do. You know, it really does work for us if we work together. And last week we had a record number of people on it, and obviously we've had an enormous amount of people watch it since then. So that's fantastic. If you've liked our show and you've shared it with your friends, please help us to help you by doing it. So remember to share it on your social media with your friends and colleagues. You'll be helping somebody else, and at the same time be helping us to do more for you. And if we work together, we can all benefit greatly from doing this. Also, make sure you put the show on your calendar so you're back online next Tuesday at 7 p.m. Now, if you cannot be with us live next week, we're always happy to receive your questions. So send them through to info@wealthwithin.com.au and just type Wealth Within Live into the subject line. Remember, I had 3 emails earlier on, so they always get read out. Now, that brings us to the end of the show. Now, we really hope you enjoyed it as much as I have in presenting it to you. I think I've earned the beer or the bourbon, and put my Ugg boots on in the warm. But as always, thank you for taking part, and we'll see you again next Tuesday night at 7 p.m. But for now, goodbye, good luck, and good trading.